Have you ever felt like you're caught in this weird financial loop where you need credit to get credit? Yeah, it's a super common frustration. But trust me, it is not a dead end. In this explainer, we're going to lay out a clear step-by-step roadmap to take you from a total blank slate to building a really strong financial foundation.
Okay, let's just dive right into this. It is the classic chicken and egg problem, isn't it? Lenders, they want to see a track record of you handling debt responsibly before they'll give you any money. But how in the world are you supposed to build that track record if nobody will give you a shot in the first place? It feels like a totally impossible catch-22.
So, to break this cycle, the first thing we have to do is really understand why it happens. Let's pull back the curtain on what it really means to be invisible in the world of credit.
To a bank or any lender, having no credit history makes you a complete mystery. They've got zero data to go on. They can't predict if you're going to pay them back on time or, well, at all. This is what people call being a credit ghost or credit invisible. And look, it doesn't mean you're a bad risk. It just means you're an unknown risk. And that uncertainty, that's usually enough for them to say nope.
So, what is a credit score, really? Honestly, the easiest way to think about it is like a report card for your financial life. It's a 3-digit number that basically tells lenders how trustworthy you are with their money. A high score? That tells them you're an A+ student when it comes to managing debt. A low score signals you might be having some trouble. And no score at all? That just leaves a giant question mark.
Now, this is a really, really important point. Having no credit is absolutely not the same thing as having bad credit. Think of no credit as a blank slate. It's a fresh start. Bad credit means there's a history there, but it's got some dings and dents, like late payments. So your challenge isn't about fixing past mistakes. It's simply about getting your story started, writing chapter 1.
Okay, so we get the problem. Now let's get to the good stuff, the solution. The great news is there are specific tools out there designed to solve this exact catch-22 and help you start writing that financial story.
Here are your 3 best options to get started. First up, the secured credit card. This is fantastic for beginners. Basically, you give them a small cash deposit and that amount becomes your credit limit. It puts you in the driver's seat. Second, you can become an authorized user on, say, a parent's or a family member's account, someone you trust. This is a great path for students because you kind of get to piggyback on their good payment history. And third, there's the Credit Builder loan. This one is really clever. It's like a loan in reverse. You make small payments, they hold the money for you, and at the end, you get the lump sum back. You're building credit and savings at the same time.
But listen, getting one of these tools, that's just step 1. That's just opening the door. The real work, and where you see the real results, is all about how you manage it, month after month after month. You really have to get this mindset locked in. I mean, 1 or 2 months of good behavior, that's nice, but it's the steady, reliable, positive habits over years that will build you an amazing credit score. Your real superpower here is just being consistent.
So with all the things to think about, where should you focus your energy? This chart is your secret weapon. It breaks down the FICO score, which is the one most lenders use, and just look at this. A whopping 65% of your entire score comes down to just 2 things, your payment history and how much you owe. If you can nail these 2, you are already well on your way to a great score.
This is it, the single most important habit you can possibly build. It's the biggest piece of the credit score pie for a reason. Even one late payment can knock your score down significantly. So set up automatic payments, put 100 reminders in your phone. Do whatever you have to do to make sure you never, ever miss a due date.
All right, the second biggest factor is something called your credit utilization ratio. And that sounds complicated, but it's actually super simple. It's just the percentage of your available credit that you're using at any given time. And here is the magic number you need to remember. Keep your balance below 30% of your limit. So, for example, if you have a secured card with a $500 limit, you want to keep that balance under $150. Staying under that number tells lenders, hey, I'm in control, I'm not relying too much on this credit.
So let's just do a quick recap of the 3 golden rules. Number 1, pay your bills on time, every single time. No excuses. Number 2, keep those balances low. Stay under that 30% mark. And number 3, just be patient. Don't go out and apply for a bunch of new cards all at once. Every time you apply, it can cause a small temporary dip in your score.
So why are we even doing all this? What's the big deal? Well, because building good credit isn't really about chasing a high score. It's about unlocking a better, easier, and cheaper financial life for yourself. I mean, just take a look at this. This is the real-world impact on a pretty typical big loan. With excellent credit, your monthly payment is under $1,700. With poor credit, it jumps to almost $2,400. That is a difference of nearly $700 every single month. Over the life of that loan, you're talking about saving tens, maybe even hundreds of thousands of dollars. That's the power of a good score.
And the benefits go way beyond just loans. Good credit can make it easier to get that apartment you want without a giant security deposit. It can lower your car insurance rates. You can even avoid having to pay deposits for things like electricity and gas. It just gives you options, it gives you flexibility, and really, it gives you more freedom and control over your own life.
So, there you have it. You've got the map, you've got the tools. That credit catch-22 is totally solvable. The journey from being a credit ghost to a trusted borrower, it just starts with one small, deliberate action. So the only question left is, what's your first step going to be?